Despite a massive rise in commodity prices in 2022 that led to high input costs for metal companies and China's zero-COVID policy that subdued demand, 2022 has been a strong year for metal stocks. The Nifty Metal Index has given strong returns in 2022, rising about 22%. Now, it has outperformed most of the other sub-indices and the benchmark Nifty 50. Yesterday, the Nifty Metal Index rose to a record high. Now, let's understand the factors that drove the rally. China is removing long-standing COVID prohibitions in all major cities. Now, as China is a significant purchaser of metals on the global market, relaxing the COVID regulations is anticipated to encourage industry activity and raise demand for metals. On the back of this, the international research companies Jefferies turned positive after being cautious about the Indian metal industry. Now, this was one factor that drove the rally. The rollback of steel export duties in November after imposing them for nearly 7 months and the decline in the coking coal prices also contributed to the rally. Another factor is the rising domestic expenditure on infrastructure, which is also driving the sector's rally. Now, despite the market's bullishness, some analysts are not so optimistic about the metal sector. Now, long-term prospects for the metal sectors are bright thanks to the government's emphasis on infrastructure projects, an uptick in construction and real estate activities, as well as strong demand from the auto industry. But the weakening advanced economies are likely to pose a risk to the global metal demand. But a potential improvement in China and strong demand in India could provide some cushion. The Purchasing Manager Index is an economic indicator that measures the performance of the manufacturing sector. Now, it is based on a survey of purchasing managers who are asked to rate the relative level of business conditions, including employment, production, new orders, prices, inventories, etc. India's PMI increased from 55.7 in November to 57.8 in December. Now, the December figure exceeded the median expectations of 54.3 in a Reuters poll. Additionally, December also saw its highest level since October 2020. Now, the business environment in India's manufacturing sector improved at the fastest rate in more than 2 years as the year 2022 ended. Now, strong demand condition and steady inflow of new businesses helped support this improvement. Now, India's manufacturing activity was also the strongest in Asia. While the manufacturing PMI actually decreased in December, there was also a contraction in manufacturing activity in China, South Korea, Vietnam, Japan, Taiwan, and Malaysia. However, due to a slowdown in demand in important export markets, new orders from overseas increased at the weakest rate in 5 months. So what does these news mean for you? While the global outlook has become uncertain, Indian manufacturers are confident in their ability to lift production from the present levels. The increased activity also indicates resilience, but we do stay wary of the macro headwinds. This will have an indirect positive impact on you. With the chances of a recession in developed countries, the export market looks weak. Even the Chinese economy has weakened due to the imposition of lockdowns in various parts of the country lately. Hence, we could expect subdued demand from the metal space in the short term. This will have an indirect neutral impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.